You're probably on your way to becoming a profitable trader. You're trying, but you haven't been able to crack the code. And this is because you've always been at a disadvantage. You see, all of these people on social media that have no track record to show for are telling you all these things that psychology is the only thing that matters. ICT coded the algo. You need to have a high risk reward. You need to have a small risk reward. Negative risk reward is profitable. All of these things that are extremely contradicting, yet you follow them all blindly. But you need to think about whose advice you are taking. Listen, this is coming from someone that has made hundreds of thousands of dollars from trading, and last year I've been able to make 96% return on a regulated broker, which I've shown already a live broker login. And most of my trading does not need any complex jargon. It does not need any the smart money, oh this is the trap, blah blah blah. No, it's simple and straight to the point, as trading should be. But because these people want to sell you something, they overcomplicate something that can be simple. And so today, I'm going to give you my honest advice on what you should focus on if you are trying to become a profitable trader. And this is basically going to be my 5-step path on how to become a profitable trader, what you should focus on every single time in order to become a profitable trader. And again, it's not going to be any complex jargon. It's not something that I'm holding from you for the longest time until this video. It's something that I've preached a lot of the times yet I'm putting this all into a video. Starting with step number 1, which is what your strategy should focus on the most when you are getting started as a trader. And that is direction. You need to understand, a trade is simply the right execution in the right direction, right? But before you have the execution, you need to forecast where the market is going. And this is where direction comes in. A lot of the traders are so focused on mastering the execution without understanding that the crucial part of execution is direction. And so they start failing because they're focusing exactly on the wrong thing. If you want to become a profitable trader, you need to focus on mastering the direction. And I've made multiple videos about the daily bias, and I do recommend you watching those after this video. But you need to understand that if you don't know the direction of the market, you should not be executing at all. Because once again, a trade is simply execution in line with direction. But if you don't have direction, you should not have execution. And I'll add a quick tip right here, which is, I just told you that you need to focus on mastering the direction. And now a lot of you are going to think, oh my God, I need to know the direction every single day. And there are going to be times where you don't know the direction of the market. And this is where you should just step away or trade another market, right? I trade FX mainly. That's where I've made most of my money. And sometimes it is just range bound. Look at the price action on pound dollar and euro dollar just before the election. There was range bound / bullish in an overall bearish market. And because of that, I refrained from executing. I did not execute on anything until when? Until the market turned bearish again. And that's where I started executing once again. And I started making a lot of money shorting the markets. And the last tip that I will give you on direction is that direction should slap you in the face. You have to look for direction to be clear when you can look at the charts and in 15 seconds you know where the direction of the daily is going. If you are able to do that, then you know what direction the market is going in, and it's as simple as just following the trend. But if you go to my FX book, the sentiment, it's always the opposite of what the market is doing. When the market is just moving lower, you'll see that most traders are positioned long, and when the market is just moving higher, most traders are positioned short. So you just have to do the opposite of that. Stop trying to call reversals. Now, point number 2, I've already told you what it is, and that is that you need to master execution only after direction. And the execution will be pretty much aligned with direction. I will make a whole video on market structure later down the line. And let me know in the comments if that's something that you want to see, because market structure is really going to help you when it comes to execution, because your number 1 goal is not to call the high of a specific day, it's to see where the high is on that specific day. The way you do that is by when you see the market structure shifting in line with the daily, that is your time to look for a trade. And so what I recommend you doing if you are trying to become a profitable trader with good execution, let's say that your direction is bearish, what you are going to do is you are going to wait for the market to move bullish, then during London session or New York session, wait for the market to turn bearish again, and then you execute with the stop loss above the high. Do not put any stop loss on FX below 10 pips. It always should be above 15. So now we have direction and we have execution. The third thing you should be focusing on is risk management, because at this point, when you're trying to focus on direction, when you're trying to focus on execution, you're probably trading with a small live account, right? Or even on demo. But I can give you the most profitable strategy in the world, and you will still mess it up if you don't have proper risk management. Because this is where you need to understand how to manage your risk, how to manage your losing positions, how to manage your winning positions. Because trading, it's all about direction and execution. But on the execution, you have these ramifications of risk management. How much are you going to risk? So many traders comment on my videos saying, what lot size should I use for X amount of account? I don't know your specific situation, so why would I tell you what lot size to use? You need to focus on, okay, this is where the direction is, this is where I'm executing, and now how am I going to manage my risk? And managing your risk should be as simple as, if you are on a personal account, do not risk more than 1%, especially if you are still in the beginning stages of your trading. Because I know there's a lot of traders that are like, no, on your personal account, you can risk 2, 3, 5, 10%. Well, can you? If you go into 5 trades in drawdown and you are risking 3%, all of a sudden you are down 15%. If you are risking 10%, you are down 50%. So that means that you have now lost so much of your account that it's going to be hard for you to bounce back, and it's going to take you months for you to bounce back. While when you are risking 1%, let's say you go on a 5 trade losing streak, in 1 month you are able to get it back. And so the rule of thumb when it comes to risk management is do not risk more than 1% per trade. And when it comes to prop firms, there's a whole risk management video that I've done for funded accounts. There's going to be a link in the description. There's also for challenge accounts. And I'm going to do a whole 30-day bootcamp where I'm going to go over everything you need, so make sure to subscribe. But that is the rule of thumb when it comes to risk management. So right now, you are supposed to have a profitable strategy, a statistical profitable strategy, by focusing on direction and execution. And then you are going to focus on the risk management. So this is going to be able to actually make you profitable, right? So you already have a lot of the key cornerstones when it comes into building your trading foundation. So now, what about psychology? Because a lot of traders, they flip this around. They think that psychology is the thing that matters, when in reality, psychology matters maybe 20% when you are in the building stage of your trading journey. And then when you're actually profitable, 80% of your profitability is going to come from trading psychology. But at first, for your first year, 20%. You don't need more than 20%, but all of these people that are trying to sell you, oh, I have this that is for mindset. Oh, I have this psychology course. None of them will tell you that first you have to be profitable, and that psychology does not matter as much when you are in the beginning stages of your journey. But let's say you've gone through this. Focus on direction / daily bias. Focus on execution. Focus on risk management. Now you're going to focus on psychology because you already became profitable. You already have the big foundation of what a profitable trader has. And so this is where you are going to focus on psychology. And no course is going to give you better tip than I'm going to give you right now. And that is, emotion is the gap between reality and expectation. And what I mean by that is that if you expect that this trade is going to make you $10,000, yet this trade hit your trailing stop loss and it actually only gave you $2,000, you are going to feel as if that was an $8,000 loss, because that is the gap between reality and your expectation. And most of you are going into trades already thinking that this is a done deal, this is a winning trade, I have the direction, I have the execution, I'm using proper risk management, thus this trade is going to be a winner. When in reality, once it becomes a loss, you become emotional, and that is where psychology comes into play. So the number one thing I want you to do in order to master trading psychology, number one, always think long term. If you have proper risk management and you're executing in the right direction, a 1% loss should never affect you, because in 1 year's time, it does not matter. So always ask yourself this question: is this going to matter in 1 year's time? And if you use proper risk management, the answer is no. And that's why you're going to move on. And number 2 is that no matter how good a trade looks, there are reasons as to why this trade is going to be a loss. It does not matter if there is equal highs when you are in a short. It does not matter if there is a supply zone above you that can still be tapped into. There's always reasons as to why your trade can become a loser. And I want you to always keep that in mind. Every time you enter in a trade, you have all of the reasons why this trade is going to be a winner. That's why you enter. But I also want you to have all of the reasons why this trade is going to be a loser, because you'll notice that if you do that exercise and the trade becomes a loss, you'll notice that the gap between expectation and reality is always smaller. And that means that emotion is going to be smaller. And let me tell you, I've heard this tip so many times and I never paid attention to it. Never paid attention to it until I started becoming so confident in my trading strategy that every time I would enter a trade on the Discord to my students, I was like, well, this trade is going to be a loss because of this, this, and this, and this. And it was coming to a point where students were like, bro, stop talking bad about this trade. And I'm like, well, no, because this is the way to go, right? This is the way that you are going to become less emotional as a trader. And so you will solve all of your psychology problems by thinking long term and reducing your expectations in the market, which is step number 4. Now onto step number 5, which is the final step. Once you've done all of these things, the number one thing you have to do is just keep rinse and repeating. Keep rinse and repeating. The reason why is because you want to master your strategy, you want to master the direction, you want to master the execution, you want to master the risk management, master the psychology, and then just do that over and over again. Because trading is a game of probabilities. Just like a casino knows that if someone goes into the casino, wins, and leaves, it does not affect their edge. Us as traders should understand that a losing month, a losing week, a losing day, a losing quarter does not affect our profitability in the long term. Because believe me, if you've mastered all of these previous steps, you are so close to profitability, and the only thing that now you need is time. And to help you on all of these steps, I'm going to do a 30-day bootcamp very soon, so make sure to subscribe. And if you like this video, then make sure to leave a like and let me know in the comments what the biggest takeaway for this video was. And with that being said, use this video to propel you forward. In what step of the journey am I, and how can I go to the next level? I hope you enjoyed, and I'll see you in the next one.